Welcome to my weekly wrap-up where we cover the news stories and trends impacting the Southern California real estate market. I'm going to go over about 5 stories this week and give you the my quick read on what I'm seeing out there. Okay, so first story comes out of the Register, and it actually came out a couple weeks ago, and the headline is "Pandemic Makes Building Homes, Not Apartments, California's Hot Property." And so I've been tracking this market closely for over 20 years now, and really since the great financial crisis, leading up to that point, single-family home construction has been way off of that level ever since. And so really from a permitting standpoint, multifamily has outpaced single family, and so for the first time since 2008 or so, that's reversed. And so basic upshot there is that the pandemic has been really good for the suburbs. People want more space. They want houses, not apartments, and the market's reflecting that. Second story, again from the Register, it says, "Untethered from the office, urban tenants are flocking to the Inland Empire." And so this is residential tenants, and the basic summary of this article is that while rents are down in both LA and Orange County for multifamily property, that they're actually up 4 to 6% year over year in Riverside and San Bernardino. And the basic summary again is just that with the workforce untethered from location, more people able to work at home, people are in essence reacting with a flight to affordability. And so both on the home purchase side, on the renting side, you're seeing increased demand in the Inland Empire, and that's been a pretty significant trend this year, and is expected to increase into 2021. Okay, the next interesting article, this one's from the Wall Street Journal. It says that big cities face setbacks as office return falls off. And so I think there was an anticipation that folks were going to be heading back to the office with more significance than has taken place so far. I think some of the setbacks we've seen recently with the pandemic have just delayed that. And so the reality is that over time, these things start to feel like a new way of doing business. And while I think there certainly is going to be more folks in the office at some point, the short-term implication is that people are continue to do more at home, and that's not going away anytime soon. So that's the basic summary there. Another story out of the Wall Street Journal, HP announced right here that they are leaving Silicon Valley and they're moving to Dallas. And so HP was one of the very early companies in Silicon Valley, kind of a bedrock kind of a company for that ecosystem, that tech ecosystem. So to see them go to Dallas, leave California, is pretty big news. Like a lot of the moves are, this continues to underscore some of the problems in California, namely just affordability. So that's the upshot there. So the last story I'll read here or preview is a little lighter, from the Wall Street Journal, rethinking the walk-in pantry. And so as I read through this article, it talks about how folks are setting up stadium seating, if you will, for their food goods, all the jars and the packaging, and people dealing with this idea of having more at home, more preparedness. But I think the kind of interesting thing about the story is it goes on to talk about home offices, mud rooms, ornate home bars, extravagant home gyms, or very thoroughly appointed home gyms, bottom line, people are doing more at home and continue to augment their housing to meet that demand and that need. And so if you're a seller, it's a great time to be a seller. If you're a buyer, it's challenging. But either way, I'm here to help. I'm here to work with you on your specific plan when the time's right, and it's never too early to start that plan. So feel free to reach out. Hope you enjoyed this segment.